Good morning and welcome to this installment of the Pro Bono Partnership of Atlanta's monthly webcast series. My name is Sarisha Ganta. I'm Counsel and Education Director with PBPA. And today we're going to be talking about financial management for nonprofits. We are excited to have with us today Tony Hilliard, Senior Vice President at Bank of America, and PBPA's own Rachel Spears, who will be talking to us about today's topic. And now I'll pass it on to you, Rachel.
Thank you, Sarisha. Sorry, I was a slide late. Here's our intro slide, Sarisha. Thank you. I first want to mention the mission of Pro Bono Partnership of Atlanta for those of you that might not be familiar with us. We provide free legal assistance to nonprofit organizations on their business law needs. So we match them with volunteer attorneys with the right expertise who can assist with things like revising bylaws, drafting contracts, reviewing leases, registering trademarks, helping with employee and HR issues. So if you are interested in our services, the requirements are that you be a 501c3 nonprofit already, that you have some connection to the greater Atlanta area, and that you serve low-income or disadvantaged individuals. We also look at the size of your organization, your ability to afford legal services. You can find out more information and apply on our website there. I encourage you, whether you apply for our services or not, to take advantage of our free resources. Sarisha and Randy have done an amazing job of updating our website with a great learning center. You can find recordings of past webcasts, of our podcast, lots of articles, and other information. You can also join our mailing list to get monthly legal alerts. There's a link at the very end of this presentation. A lawyer, so I got to give my disclaimer that what you're hearing today is not legal advice. This is just legal information. While we do encourage questions, by the way, we'll probably take those at the end of the presentation. So, Tony, I have a question for you to start us off. You are the banker here. Good morning. So, Tony, in addition to being a banker, you serve on nonprofit boards, you work with nonprofits. So I'm interested in your take on just the threshold question. What is financial management? And why does it matter whether nonprofits have good financial management? Why are we here today, Tony?
Why are we here? Rachel, thank you so much. I appreciate the opportunity to partner with this discussion this month. And that's a great question. Why are we here? I think we have, over the years, started to think differently with how we educate clients, consumers, and everyone else that banks with us and that is connected to our industry a lot differently than we've done in the past. So a lot of not-for-profits and companies have not really thought about how healthy they are and how do you easily assess the health. And so I think what has become more important as we've gotten past the financial crisis, we're clearly in a pandemic right now. Financial resources are always limited. We're always trying to figure out how we do more with less, especially in the not-for-profit world. And I think some of the guiding lights that we have found that are important are the things that we'll get into today, which are thinking about budgets, thinking about the use of cash, thinking about how you protect your business, not-for-profit, and yourself personally from fraud. And when you start to pull all of it together, I think it gives you a better roadmap to do all of the great work that you want to do with your organization. But where it becomes a distraction is when we haven't laid the foundation and the groundwork to really kind of think about financial success differently than profit making, if you will. as a key ingredient to being able to serve your mission.
Thank you, Tony. And I would add to that, there are legal aspects to these pieces too that we'll try to cover here today. And when I think about financial management, I think about, because I'm a lawyer, I think about what can go wrong. That's what we do. Think about what can go wrong. And if you don't have good financial procedures, good financial structures in place, what can go wrong? Well, everything from, you're presenting yourself to a big funder for a donation and they ask to see your financial statements and you have not taken the time to get those ready, or you have trouble complying with state registration requirements that we'll talk about because you haven't taken those steps, or worst case scenario, something we have seen, unfortunately, many times over the years is your organization might face, someone stealing, like embezzlement. We've seen that with board members, with volunteers, and certainly with employees of nonprofits stealing from the organization. So we do want to help you get in a place where you've got good financial management and can avoid some of these issues that we've seen with our clients. So Tony and I are going to present to you today a series of case studies. Randy shared with you both the PowerPoint and the case studies, which is a PDF document, in the chat. If you're a visual person like I am, you might want to read along with the case study because they're pretty long. But as we read along, and Tony's going to read the first one, I'm going to ask you to think about what are the potential problems? What are the red flags going up for you when it comes to financial management? And I encourage you to put that in the chat as you see things. If you want to just type in the chat things that you notice, we will go over it at the end. But Tony, you ready?
I'm ready.
All right.
I'm going to test my reading circle ability this morning. So case study one, and for those that have had an opportunity to look at the three cases already, I want to tee up what case study one really is kind of focused on. We kind of start from a foundational place, meaning you may just be getting started with your not-for-profit, or you may be a little further along in the journey, but may need to start thinking about how you reset and put some of these things in place to really kind of help you thrive and be more successful. You'll hear me use the word thrive in our conversation quite a bit here because it not only has been something that they talk about in mental and physical health. I think if you think about your financial health, there's a different mindset when you say I can thrive than just make it and get by. And I know not-for-profits are always trying to make it and square their mission with limited resources, but there's something to be said about opening up and saying we can thrive here. So case study one, Sally Smith is a teacher by trade and has over the years worked at daycare centers. She's always wanted to start a not-for-profit daycare to allow low-income working parents a safe place to keep their children. She converted a garage and first floor of her home to a daycare, obtained the necessary certifications, and opened the doors. She formed a 501c3 entity, which has 3 officers so far, including Sally. Her other officers are her aunt, Peggy Page, and her friend, Jane Johnson. They have one board meeting. They've had one board meeting. Sally is often short on donations and supplies, so she will loan paper products and food from her personal pantry to assist the daycare. Once in a while, when she runs short herself, she will borrow some of it back. Sally is pleased with the donations of supplies and clothes she's been receiving from friends and church members, and last week she asked for donations from the community and received $2,000. One of her church members asked for a tax receipt, but she's not sure what that is. Sally opened a bank account for the daycare, but she is so busy that she hasn't prepared a budget or set up a bookkeeping system. Sally plans to look into whether she needs insurance. A number of people have expressed an interest in her cause, and she plans to enlist them. as well as some friends and church members to serve on her board once she gets a chance to get organized. I think I did okay on the read.
You did excellent, Tony. Good job. So I hope you kind of thought about, I hope some red flags went off for you as you heard that, but let us highlight some of those issues. So Tony, one big one for me was the board, the involvement of the board. So there are 3 board members, Sally, who's also kind of the executive director, I guess, and her aunt and her friend. So it doesn't sound like a very independent board, and they've only had 1 board meeting, I think you said, Tony. So they don't sound very active. So we'll talk about kind of the role of the board in financial management, but that's one thing I noticed. Also, I know you want to talk about the separation of where she's mixing her personal and business resources. Why is that a problem?
Yeah, let's start there. And I think, again, let's build a solid foundation. I think we'd all agree what she's trying to accomplish is completely admirable. I think we can all understand having to borrow from here to there to really just kind of make it through the day, especially when you may not have had the ability to plan either financially or, gosh, more kids showed up today than they did last week, my order, the supply chain issues that we run into now. There's a lot of different reasons on why she would be borrowing back and forth personally. But I would submit that the first thing that she should really be thinking about is how does she financially separate the not-for-profit from her regular life? Completely acceptable for her to order everything through Amazon as she does personally, as she would professionally. And I think a lot of people think that it's entirely too costly to start budgeting. They feel like, you know, if you start to Google things, there's a lot of software teasers, especially years ago. It used to be really expensive to try to set that up. Or the real kind of where people, I think, clam up is just not sure. She said, I'm not even sure what the tax receipt is, or not confident enough to be able, I'm not a math person. I have this mission. And so I think the starting point is the budget. You could Google some easy or low-cost tools that are out there. QuickBooks, Google Docs is a way to start, and it could be as simple as saying, here's what I'm expecting to receive from donations. Here's what I'm expecting, even if you're getting a small amount for those that you're serving in the mission. But here's what the expenses look like. Basic what's coming in, basic what's coming out. And having that starting point gives you the visual. You talked about being a visual person. The visual understanding of, gosh, am I going to fall short at some point during the year? Am I in a good position with this $2,000 that I received to earnestly figure out how I stretch that? How do I go back to other donors to say, hey, we got some momentum here and we're doing great things? But a basic, here's what my intake is, here's what's coming out, a lot of easy tools to set you up for success early on. So a good budget, a good separation. I think the good thing to point out here, she did open a specific bank account. Make sure that those funds are certainly always being used for the not-for-profit. If she is going to send money herself, you should move that via check, via cash, however, from her personal account directly there, and then have a quick way to account for it. Because she could say, hey, I loaned the money to this organization, or she could say, I'm putting money and investing as a donor myself, where she could write that off personally. But there's easy ways to try to figure that out. And what's a great resource that I think has come a very, very long way is irs.gov, specific sections for not-for-profits that will give you pretty clear tutorials on how to keep yourself and the organization safe, because I know that's an important piece from a legal perspective for you, Rachel.
That's right, Tony. That's a good overview. Let me just add a few things. I mentioned the board's role in financial management being really important. They are there to safeguard the assets of the organization, ensure the funds are used properly. Remember, you're a 501c3 tax-exempt nonprofit organization. You are not a regular for-profit business. So even if you started this organization and are pouring your heart into it, you are not the owner. There has to be a board in place to provide oversight, and that includes really important financial oversight to make sure the organization is spending the funds properly, make sure you're providing the proper tax documentation, and that you're providing them the financial information they need to provide to do that oversight responsibility.
One thing I'll add about the tax receipt, I kind of skipped over that. We've all figured out a way to donate something, whether it's goods or services or financially. Some of the major ones that we have all maybe given clothes or food to, they ask you, do you need a tax receipt? And if you will see, a lot of what they are sending are actually handwritten, but easy to follow. It has the tax ID for the organization, has the amount that they estimate the goods are worth, and it has a signature. And again, IRS.gov will give you some basic pieces, and there's easy ways for you to kind of track that now. The mobile phone has made it easier to say, here's what I gave to Sally Johnson. Take your photos, keep it in kind of a safe file and place, and those are your records that you're able to use to kind of follow along. So some of these fundamental things that if you set up and start a routine from day one, just become who you are.
I'm going to jump ahead, Tony, since you mentioned tax receipts. We have a really good resource on our website that's the guide to sending acknowledgments for donations. The IRS has certain language that they want in that acknowledgement that you provide donors. And if you don't include it, they may not accept that as a tax deductible donation. So it's really important you provide that, what I call magic language that the IRS requires. So what that language is depends on the type of donation it is, whether it's cash, which includes credit cards, checks, whatever, monetary contributions, or whether it's in-kind donations of goods. And there are special rules for quid pro quo contributions. So if someone pays, donates $100 to the organization, but in exchange, they're getting a ticket to your event, there is certain language, again, that you need to provide to show what they can take as a deduction. So be sure that you're providing those receipts. One last thing I mentioned on here is donated services. Anytime somebody's providing just services to you that is not tax deductible, so what you should provide to them is a thank you note. But again, check out that great resource on our website. Tony, could you speak a little bit to the importance of budgeting? I don't think we've covered that yet.
Yeah, so the importance of budgeting. You're trying to give yourself, your donors, your board, a clear understanding of your financial position throughout any given calendar year. And putting pen to paper or using an Excel file to really kind of map out your expectations, because a budget is based on the information you have today, your best estimate and best guess. There are, for this daycare scenario, very possible for you to even Google how much do typical daycares charge? Now, this is looking at a targeted low income. And how much do they charge per child? What are some of the costs that are regularly reoccurring, rent, utilities, and other pieces? What are some of the costs that may vary? Oh, we need diapers and we need food and other items. And so what you're really doing is saying, I expect I'm going to have, let's use a round number of 10 kids. 10 kids, I should expect to spend this amount on them during the week. Here's my little money in reserve for unexpected items. That gives you a clear roadmap of being a good financial steward for the not-for-profit. It gives any potential donors the idea and the mindset that you've really kind of thought about it thematically of making sure that you're completing your mission. More and more, I think, Rachel, you would probably agree, is that donors are getting more sophisticated in the sense that they want to know that those dollars are actually going to serve the mission and not being used for other items. And we'll get into some of those things a little later in the conversation. But it's important to be able to benchmark for yourself. And when I say benchmark, is compare yourself year over year, growing, shrinking, what might be doing with other similar not-for-profits. They might not have the same mission, but they may have some same basic tools that you're using. You have more access to information to be able to help guide you. So I would say use it. Especially you could look and find larger, specifically not-for-profits, not even all larger. They'll publish it on their website, their Form 990. They'll give you a really good sense of the ins and outs, and just try to mimic and mirror those to just help you to make sure that you're staying within the guardrails of what you can afford to actually do.
That's a great suggestion, Tony. All right, the last thing we wanted to point out on this case study was just, we had mentioned that she's looking into insurance. Tony and I are not insurance brokers, but I think insurance is a part of your financial management that you need to keep in mind because it's a way that you protect the assets of the organization. Any nonprofit that's doing any activity should have some sort of a general liability insurance policy in case someone gets injured. But there are lots of different types of insurance, so it's important you get a good broker that can help figure out what your organization needs. Certainly, a childcare facility needs insurance. There's no question about it. But you can look at what type of insurance. And we mentioned directors and officers liability insurance on here. That might not be the first insurance that you get as you're building, but as you can afford it, that's going to protect your officers and directors against certain types of risk, including, I think, financial mismanagement kind of risk. It can come into play. So that's something to consider as you grow your board. And then I would just add, risk management is not just insurance. It's also looking at other ways that you can protect your organization from foreseeable risk. So something to just keep in mind. Do you have anything on that, Tony? I think you're going to mention umbrella insurance. Yeah,
I will add that there's easier, again, trying to uncover the mystery of some of these things feel daunting, right? Easy enough to do some easy searches to get good comparisons that will say, let's help scope out your need. A lot of websites are doing that for free, by the way, without a charge, saying, what do you think you might need? What are you in the business of doing? And it will kind of guide you, and you can kind of play with and figure out what the premiums may be based on what, again, the organization's mission is. If there are people on site that you need to protect, children and other items, they do a really good job of directing and guiding. I'd also say, don't use one source, find 2 to 3 sources, find 2 to 3 different, maybe even brokers that can help you guide your way, because that will just inform you better. I think a lot of folks being so busy trying to move on to go to one individual or one person, and you could be overpaying, you could lack some of the basics that you were looking for. But if you got 2, at least you've got something to compare that they feel similar or different. And if you've got 3, even better, they're probably going to line up pretty closely.
Thank you, Tony. I'm going to move us on to the second case study, which I will read. And y'all are being quiet in the chat, but I encourage you, if you want to point out any of the red flags that you are noticing as we read, please do. So this organization is farther along than the last one. Mary Mack has worked with Lovey Dovey nonprofit for 10 years. Because she has been with the organization for so long, she has been entrusted to handle a variety of finance functions. Mary's current responsibilities include receiving, handling, opening, and reading all mail, processing all contributions received and accounts payables, processing and preparing employee and volunteer reimbursements, processing, signing, and mailing checks for accounts payables, counting cash for raffle item sales, making deposits and taking them to the bank, performing bank reconciliations, preparing annual budgets and financial reports as needed for the board and funders. Mary Mack's responsibilities have evolved over time, but nothing has been created to document the financial policies that she is expected to follow. The executive director has not expressed concern over the lack of documentation. Mary Mack has proven that she can manage her time well. However, she has had unexpected situations arise from time to time, both personal and with work, that have made it difficult to handle all of her responsibilities on a timely basis. Mary Mack does not have the time to prepare monthly reconciliations. She is often behind on preparing the nonprofit's quarterly financial statements, and she's not sure that she's doing them properly given her lack of training. All right, Tony, we've already identified the big issue here in the chat, separation of duties. Do you want to speak to that?
Oh, look, I think this is a struggle for a lot of small organizations, is wearing multiple hats, trying to do your day job, and then these other things, compliance and reconciliations, get in the way. And I think as best as you can, today we have more resources to try to have visibility when you can't separate duties. So let's start with having the lack of folks to be able to separate things. What can you do there? Electronic information and statements. So in this particular scenario, I think that you've got to have the executive director, you've got to have Mary Mack, who has the current responsibility, and maybe one other person that gets copied on the bank statements. That separation of duty, if she's in charge of checks, which she is, figure out what threshold makes sense for you to have two signers for those checks. By the way, Rachel and you and I talked about this a little bit. Big misconception. The banks are not checking to authenticate that you have done your two signature items. Most signatures, and I know mine is a couple of lines of squiggle. They will process and make those payments. It's not the day of old where we went into our local community bank, they knew who we were. The process is so much different now. So just be aware, if it's a valid check, it's likely to go through the system without disruption at all. But reconciliation of the statements, executive director should probably just put 10 minutes every month. As soon as you get that notification that the statements are out, a quick scroll through will give you a good idea. This seems like an outlier. This seems like a major thing that I don't remember seeing. 5 to 10 minutes will give at least lens and eyes to that. If you're also clear that as executive director, the accounts payable person, and maybe one other, maybe it's even a board member that's looking at that quarterly, everybody knows that all three of us are watching, you're likely to have less fraud committed by someone internal. So that's the starting point for a few people. Blocking certain types of transactions. If there's no need for you to ever send a foreign wire, and these are little in the weeds details, you can ask your bank to say, hey, we're just not going to even allow wires at all. It's actually a more expensive way to move money, but wires are are the most utilized major crime organization ways in which to defraud. And a lot of them might not be, you've heard the big $1 million here or multi-million dollar there. A lot of these things are small items, 100, 200, 300. It goes out of your bank account, and a wire, different than other transactions, if it's authenticated, it's gone. And so deleting those types of transaction ability from your account is an easy one. Another one I want to clear up, we talked about this too, anybody that still has physical checks, you'll look and see, and I wish I had one right now, but I don't have one, but at the bottom, they call that the Micker line with a bunch of numbers on the bottom of it. That is your routing number for your bank account. That is the actual bank account number. Those are the two pieces of information that are highly critical and easily engaged by anybody attempting to do fraud to move money out of your account. And if you wrote a $10 check to PTA, all these people have your information. So safeguarding that aspect of it is actually not the most important thing. The most important thing is for you to be reconciling your bank information and transactions, understanding where things are out of line, maybe not even having check stock available at all, paying people via ACH, which is an easy, fast way to do business. I know we'll talk about more sophisticated ways to move money around, but having some of these basic tools in place will keep you safe. Weekly payroll, you may want to have as executive director see, hey, how many people are we paying? Is it 25 every week? Did we have someone come in for 1 week? You should have eyes and lens on that. You should have eyes and lens on dollar amounts that seem out of line. I also feel like you should, as you've gotten bigger, have a separate account for just payroll versus other items that come out. Again, it gives you clear line, clear visibility into what's going in and out. And if you set up a routine on a consistent monthly basis, you'll spend less time doing it, and you'll actually understand more often where you might have issues or challenges.
Thank you, Tony. Those are some really good tips for us. Just to make sure we cover everything, there were no written financial policies. So as you evolve and put some procedures in place, make sure you're writing them down and then updating them periodically. And then I don't think we mentioned that there were no monthly accounts reconciliation, but as Tony said, that's really important to be keeping up with so you can have that oversight, and same thing with the financial statements. I'll add one other thing about separation of duties, which Tony already covered, but so when Pro Bono Partnership of Atlanta started 16 years ago, I was the only employee. And we have grown since that time, but as we've evolved, we've had to make sure we have those internal controls in place. So in the beginning, when it was just me and it was our board treasurer had a really important role. And as we added staff, we were able to spread it out a little bit more. We now have an outside bookkeeper that prepares the reconciliations. Thank goodness it's not me anymore, but this is something that's going to evolve as your organization grows, and just keep looking for ways to find those separation of duties. Go ahead, Tony.
One thing, Rachel, that I was thinking about as well, folks that are no longer part of your organization and eliminating their access to all of the functions and information that they were getting before. That's an easy one to overlook. And
Absolutely.
Again, setting up policy and routines around that, just making sure that you're just thoughtful around that aspect of it.
Mm-hmm. Yeah, we talked about policies and reconciliations, and financial statements. Go ahead.
Fraud. Let's get into fraud just a little bit more. Here's where I think even not-for-profits should really be thinking, and this is also a little bit of just personal advice. Financial institutions spend billions of dollars every year to try to keep our money safe that we hold with them. And over the years, it's become significantly more sophisticated. Rachel does not spell her name with an A. What happens now is you get email phishing, and maybe many of you have heard of that, where they're trying to mimic an executive director or someone with responsibility. The email seems urgent. It seems authentic, but they've spelled Rachel's name in the email line that you may not see, and it could be a middle initial that they've added that's not even her middle initial, and you'd overlook that, but it feels authentic. It would have the PBPA logo in the in the email and the signature line. They've figured out ways to mimic all of that, and you may in your rush say, "Oh, Rachel's done that before. She said, hey, I forgot we were supposed to pay XYZ. Can you take care of that?" And that seems innocuous. And you may respond to that email, okay, taken care of. Well, it's not going to the real Rachel. What we advise in some of these scenarios is to not email transaction activity and requests for transaction activity between two parties. If you receive an email, you should take an outbound call or even a text to say, hey, just confirming you just asked me to send XYZ money to this person. Those are easy kind of safeguards to figure out. Human error tends to be where we see a lot of fraud perpetrated. Now, internal fraud are the things that we kind of talked about already, and you having more people visible where you've seen, gosh, why does Mary Mac keep paying $75? That feels like her aunt's name that she's sending $75 to every month, or her son's name, all these other little things. You probably have talked about this, Rachel, enough case studies to where somebody personally may be financially stressed and they have the ability to take a little money and they may intend to try to put it back at some point, but then it snowballs. Or they're just nefarious people and they've decided that they're going to take from your organization that is actually just trying to do a critical mission. Some of these little check-ins and making sure the folks that work with you say, I got eyes on what's happening, will limit that, and they'll go elsewhere.
That's right, Tony, where we've seen instances of embezzlement in the organization, it's been where there've been no separation of duties. You have one person who really just had free reign to do whatever they want, and nobody was really providing that oversight. So it's not that hard to set some things in place to try to prevent this. One thing we didn't mention, Tony, I just wanted to make sure we get is we mentioned cash in the case study, counting cash for raffle sales. I think we said, make sure you have two people always counting cash together. That's an easy thing to do. And the final point I want to move on to our next case study so we have time. Financial statements. And I see some questions in the chat. We are going to get to those at the end, make sure we don't forget them. But on the issue, I get questions of at what point do we need an audit, et cetera. From a legal perspective, there are practical considerations. There might be certain funders that you can't apply for a grant until you have audited financial statements. But from a legal perspective, the one thing that comes into play for sure is if you register for charitable solicitation, that is something any organization that's soliciting donations from the public needs to register with the Secretary of State, specifically for charitable solicitation registration. And I'll jump ahead to the next slide because they have requirements for what information they're going to need from you in order to get that approved. And it does require an audit for revenues of over $1 million. And then you see in the $500,000 to $100,000 range, you can just get your financial statements reviewed by an outside auditor, and then under 500,000, it's just compilations. I've got a link to an article we have on this on our website, and I'll go ahead and answer this question about how do you find an affordable auditor? Great question. There is no pro bono partnership for accountants. We do have a list on our website of accountants that work with nonprofits. These are not pro bono, but these are are auditors that we are at least aware of working with nonprofits. So you can look for some names there. But yeah, it does cost money. So it's sort of looking at it, especially if you're need an audit to apply for a foundation grant, you can look at it like it's an investment. If we're likely to get this grant, maybe it's worth paying for the audit. All right, I'm going to move us along to the final case study. Tony, if you could read this one for us.
Okay, my read. A Happy Place with Inc., a Georgia not-for-profit corporation, hired Carlos Maya last year to serve as its financial officer. Carlos's first task was to prepare the not-for-profit's annual budget for this fiscal year. He was optimistic about the economy and projected a 300% increase in revenues. Carlos heard that the board, which includes the executive director, usually approves the budget with little to no discussion. In addition to his responsibilities in preparing the budget and bookkeeping, Carlos is also responsible for managing payments of the not-for-profit's expenses and responding to requests for financial information. During his first month on the job, the following issues came up. Danara Safina joined the not-for-profit's board of directors. She requested the not-for-profit loan her $50,000 for a down payment on her new home. Andy Murray, an employee for the not-for-profit, is traveling to Los Angeles and on not-for-profit business. Since it's such a long flight from Atlanta to Los Angeles, he requested that the not-for-profit purchase a first-class plane ticket for him. In addition, Andy requested that the not-for-profit pay for the expenses of his wife, Ann, to travel with him. Ann is not an employee of the not-for-profit. A Happy Place received a grant from a major foundation to fund a new program, and Carlos wondered whether he needed to set up a new bank account to track the funds. Lindsay Davenport, an employee of the not-for-profit, needed office supplies at Staples last week. She took money from the petty cash drawer and forgot to get a receipt. The executive director received an email from a vendor complaining that they never got paid. Oh, we talked about this one already. I jumped ahead, Rachel. Never got paid and forwarded the email to Carlos asking him to pay it as soon as possible. Joe Smith walked in off the street and asked to see a copy of the not-for-profit's Form 990 for the last 3 years. Joe liked what he saw, and he told Carlos he wanted to make a major donation to the organization and asked whether they accept gifts of stock.
So
even in our 2 or 3 case studies, there's overlap, right? We kind of covered off
Yeah.
on one of the issues here already, but.
Yeah, and we threw a lot at y'all in the end in the last one. Wanted to make sure we covered it all. Somebody pointed out the mismanagement of funds issue, and I'll run through some of these quickly to move us along. But this loan to a board member, obviously that's a bad idea. I hope you all know that. Somebody commented, LOL, everything is wrong. Payment of travel expenses for a first-class ticket doesn't sound like any nonprofit we work with, and obviously you would not pay for the wife as well. And so let's go through the slides and I'll make sure all of these come up as we do. So do you want to say anything else about budgeting, Tony?
Yeah, so you mentioned that I sit on a not-for-profit board or 2 and have in the past. I think it is large, small, medium-sized, just getting started, an important thing to make sure that you have sign-off from who's ever leading the organization. And that should include a board member that has some financial oversight, executive director, and if you can, a small committee of other folks that have really kind of thought about it and said, we feel comfortable and confident with this. Ties into just thinking about the financial health. It also ties into what we see in this scenario, the potential for donors and them wanting to look deeply in your financial commitment and history and making a decision whether to donate or not donate based on that. And so it's just a good rule of thumb to start right there.
Thank you, Tony. Tony and I discussed a little bit this idea of expenses and just making sure they are appropriate and reasonable for your organization based on the size of your organization, based on your budget. You certainly don't want to be known as that extravagant nonprofit. One more point about loans. If you make any loans, you do have to report those on the 990. So if there were some reason to give a loan, you would need the board to approve those. For travel expenses, to avoid issues like this organization have, make sure you have really good written policies that cover how expenses are paid, require receipts. Certain expenses should be approved in advance. And obviously, if you're not going to pay for travel expenses for spouses, that would be taxable income to them, by the way. Petty cash account. I don't know if people even have these anymore. This seems kind of old-fashioned in this day, but probably a good idea to avoid them because they do create some problems having some cash lying around sometimes. But if you do, certainly keep those locked up, make sure somebody is monitoring them, making sure you're getting receipts. And one thing I wanted to make sure to cover is financial disclosure. Somebody in this case study comes in and asks for a Form 990. Anyone can come and request to see your Form 990. That is a publicly available document. Anybody can go on GuideStar and view it. Anybody can come in and ask you to provide them with a copy. So it's just something to keep in mind as you prepare that Form 990. Know that it needs to be accurate. You know, think about everything you're doing from a financial perspective is going to show up in that document. Everybody's going to know about it, including potential donors. So something to keep in mind as well. I've already gotten to the bottom. This is the resources that we wanted to make sure you have. But Tony, did you have anything else to add? We did cover phishing emails earlier, but I wanted to give you the opportunity to add anything on that. I've gotten phishing emails as an executive director saying so-and-so needs to be paid. And Tony's right. You really need to look at those carefully, see if anything at all looks out of place, and certainly follow up with whoever is sending it or, you know, to confirm that, you know, that is something you need to follow up on.
One thing I'll add about that is whether it's a wire, ACH is a little bit easier just depending on the timing of an ACH. Other outlets like PayPal and other places where there might be the ability to have recourse if it is fraudulent. You should make the assumption that if you pay in error, you're likely not to recoup it. Large, small, unless it is a situation where you have someone who's gotten control of your Visa card, where we all know that, you know, the liability is actually on Visa or MasterCard or American Express should someone get our credentials. That's very different than your live cash in your bank account. And I just want to clear up, the responsibility typically does not lie with your bank that you use. It typically lies with the receiving institution if they're moving from XYZ Bank to ABC Bank. And so where we have seen the challenge for for-profit entities, not-for-profit entities, is getting a hold of the right people to try to help them out of the challenge that they find themselves in. And I think once people have been hit with a major scam, if you will, it's kind of earth-shattering to them, and they have this mindset of, well, why can't you just claw it back? System doesn't work that way, especially if you have authenticated it. That's why having two parties and checking to see to make sure that you're not double paying an invoice or paying it to the wrong provider, those are critical, especially if that money really matters.
Thank you, Tony. Before we get to the questions, there were two other items from the case study I wanted to mention. One is the question about whether Carlos needs to set up a new bank account to track a grant from a major foundation. If you get a restricted grant, how can you track that? And I think the answer to that is you don't need a separate bank account, but you need some system in place for you to be able to track that in your internal bookkeeping, to be clear. Do you have anything to add to that, Tony?
No, that's absolutely right. Just being able to track is the important piece of it.
Yeah, because you'll have to report on that, I'm sure. And then the last item on the case study was a donor who wanted to make a gift of stock. This is a question that comes up a lot. Tony, can organization accept stocks and bonds?
Yes. Yes to stocks and bonds. I would say yes to cryptocurrencies. We were talking about that being the new thing, and there'll be some new thing. It's really interesting. A decade from now, there'll be something very different and new. I think the rule of thumb for not-for-profits is easy. Open a brokerage account. There are also brokerage accounts that you can open for cryptocurrency. So if someone gifts you a cryptocurrency, best practice, in my opinion, is not to see if you can increase the value of that in the future and hold on to it. Open the account, accept it, however many days that is, and immediately sell. In all three instances, stocks, bonds, and crypto. Because that donor really wants you to be able to use that money for the mission. And don't be in the game of trying to play the bets, if you will, with a resource that is important to your lifeline.
Totally agree, Tony. You want to sell those right away and take the proceeds as a donation. One point I would add is to consider having your board adopt a gift acceptance policy for how to handle donations other than cash. So stocks and bonds, cryptocurrency, like you mentioned. We have a good resource on our website that just came out, I think, this month on cryptocurrency you can check out. But I just had a client ask me about accepting a donation of real estate. So we're going back to what the gift acceptance policy says they need to do in that situation. Let's see, we've got a lot of questions in the chat. So let me see if we can get to these, Tony. Someone asked, if an organization has excess funds, should they be invested? If so, where and how? I'll tell you quickly what we do, and then Tony, you can add anything. At Pro Bono Partnership, the board adopted a policy, an investment policy for excess funds and how they should be invested. They adopted a very conservative stance on what those can be invested in, mainly CDs. And, we have a finance committee now that kind of makes sure we follow that policy for any excess funds. So I think that's the key, is to really think thoughtfully through that, how to protect your resources. Do you have anything to add, Tony?
I do believe it's about protecting the resources and, like you said, having a policy and following it. The hardest thing to do is, and if you want to change those policies in the future because now you have some history to understand, then by all means, every year you should be really thinking about, did this work for us?
That's right.
Or what else should we be considering? But having a policy and following, I think, is the one thing that I would submit that being a treasurer for a few not-for-profit boards, it's really hard to do if you don't have details to guide you. Yep.
All right, next question is about whether there's a best practice around changing auditors after a few years. I don't know of what the best practice is after a certain number of years. I know for like big public corporations, there is a best practice. I know that's a bigger issue there, but I think even with small nonprofits, it's a good idea to consider changing periodically. You get a different set of eyes on it. You don't have that close relationship, with the auditor. So we did recently change, and I want to say we've changed a few times. We change probably at least every 5 years, but I don't know of a best practice for nonprofits. Do you know, Tony?
I would say I went through this process a few years ago, and I think about, not only, when we advise our clients that have 401ks and pension plans and things of that nature, you're doing another health check. So to your point around maybe a different set of eyes that gives you a different set of advice, you may stick with the current provider, but you also may say, gosh, this new group came in and showed us some real value we didn't know before. Maybe it is time for us to consider making a change. Or they point out some major gaps that you feel like you need to shore up. Or you find yourself, now you have some conflicts associated with those auditors. Maybe you really like that audit team and you want them to join your board. Well, those are the types of things that may give you the impetus for thinking about some change. But make sure you just have a plan to review. A lot of this is, to me, financial is about a plan and a plan to review.
Yep. All right, a question about handling best practices for handling gift cards. That might be a good thing to cover in a gift acceptance policy, is how do you handle gift cards for the organization? And maybe you have somebody that collects those and figures out the best way to have them benefit the organization.
Yeah, there's a lot of ways now that if you've got a multitude of them, they may charge you a fee for doing it. You can sell those gift cards to another entity. Again, they may charge you a fee or a percentage of the value of it, but the thing is that they're giving you cash versus you having to figure out what to do with thousands of dollars of XYZ sporting goods. And that's not within the scope of your mission.
That's right. All right. I think I got to all the questions. It looks like you have slides now that are clickable. Do we have any other questions? Yeah.
We do have one more question that was posted in the Q&A. And our viewers asking who should have access to bank information, both in terms of people inside the organization and anyone outside the organization.
I got a thought on that, Rachel.
Yeah,
I got a thought on that. It's interesting that you always want bankers on to kind of run finance for you. And so I don't know that that's always the best idea, but I get, you feel a little pigeonholed. I was like, I can do other things. I know strategy. I know some other things, but I personally, and my organization has said, if I serve on a not-for-profit board, I should not have the ability to sign on checks. Right? There's a natural conflict for me there. I would say going back to separation of duties to answer that. Maybe you have people that can read information and see where the money is moving. And maybe you are separating who can read with who can actually action. Where you can, separating who can actually use the information and see the information versus making action on it. But you resolve the problem that we talked about before of not having one or two people or even a siloed group of folks having all of that control.
Thank you. I had a note that we had one question that came in with the registrations about how long to keep financial records. Just wanted to quickly mention it's a good idea to have a record retention policy that covers how long you keep all different categories of records. But Tony, real quick, what's your advice on how long to keep financial records?
I tend to think about it how the IRS thinks about it, and maybe 7 years is probably well enough. Anything beyond that is probably a risk for you to continue to hold on to operationally, quite honestly. And you should really move away from paper records where you can. If you really need something paper and tangible for IRS, then by all means keep that. But it's certainly easier to store and have password protection with your financial records on your servers and computers. Passwords are key. Authentication. Oh, that was the other thing I meant to mention at some point, Rachel. So much easier for your bank accounts to have two-step authentication. And maybe you've done it in your personal life, whereas when I log into my bank account, it will send me a text message or send me an email, and now I got to put in the 6-digit code. We actually just started that to log on our laptops when we're not on our bank server. It's just another way to make sure that you have the proper controls. Because what's the likelihood of me being able to get your bank account information and have your phone and email?
Yeah, I completely agree with that, Tony. All right, I'm not sure I understand the question from Denise, if you want to follow up with an email on that. And then we did talk about it's probably a good idea to switch auditors. I don't have a recommendation for a specific number of years though, but periodically. And we have a reminder to complete the survey, and we are out of time. So thank you all, Tony, especially. Thank you so much for joining us today. And thank you, Randy and Sarisha, for running everything.
Thank y'all for having me. Randy, Sarisha, Rachel, thank you so much.
You're welcome back anytime, Tony. Y'all take care.
Right. Take care, everyone.